This episode is brought to you by Bank of America. What if your business could see beyond what is and into what can be? And what if you had a partner as visionary as you are? Bank of America gives customers access to trusted experts, real-time insights, and digital tools to make every move matter. What would you like the power to do? Visit bankofamerica.com/banking for business. Bank of America is proud to be the official bank sponsor of FIFA World Cup 2026.
I think I just won my taxes.
Yeah?
I just switched to H&R Block in about 1 minute. All I had to do was drag and drop last year's return into H&R Block, and bam, my information is automatically there.
So I don't have to go digging around for all my old papers to switch?
Nope.
Sounds like we just leveled up our tax game.
Switching to H&R Block is easy. Just drag and drop your last return. It's better with Block.
Hey guys, Akil Stokes here. Welcome back to the Trading Coach Podcast. Today we're going to talk about trading around the clock, and is it worth it? Is it even more profitable to spend more time looking for more trades? We got a pretty cool discussion on that. But before we hop into it, just want to tell you guys how happy I am at where the podcast has been. I got a comment from someone the other day that said it's incredible the range of topics that we hit on this Trading Coach podcast, from diving into the technicals as much as we can in a mostly audio type of way, to talking about trading psychology, to talking about lessons that are kind of trading related, but more so like empowerment, self-development, motivational stuff like that. And that was always my goal with this show. It wasn't just to be like another trading show, because there's millions of those out there. The reason why I don't do interviews and stuff like that is because I want to cover the topics that you guys want to hear about. And as all of you guys are a little bit different, we touch on a lot of different subjects. And it's just so cool to see how exciting you guys are about it. If you guys are new to the show, by the way, and you're like, Akil, what are these interesting topics you're talking about? This is my first episode. Just go down the list, whatever podcasting app you're on, scroll down or go to Google and search Trading Coach Podcast and enter a random topic that you think you're interested in. And there's probably a Trading Coach Podcast episode on it. But certainly take that 10 episode challenge, listen to 10 episodes, share it on your social, and then hit me up with questions. That way I can make a podcast specifically for you and the thousands of others that are probably asking the same questions but too shy to type it in. Anyway, let's hop into the episode. This comes from one of our private Q&A sessions on the platform. And bon appetit. Here's what it comes down to. Can you actively trade? Do you feel like you could actively trade your strategy if a signal comes at any point in time? Or do you feel like there's only a certain period in which you can take trades? And there are options. Like you can, when I traded two targets with patterns, right? What I would do is I would set on like the hourly charts, because things get wacky there overnight. I would just do 1 in 1 out orders. And if I got a pattern triggered during the nighttime and it got filled and I was out, if I woke up and it was filled and still in progress or something like that, then I would adjust it back to 2 targets. So maybe you can make those adjustments where you can have a kind of a not active style of trading where you only take a single target, and then during your active hours, you take your normal multiple targets. That could be an option if you don't think you're going to be able to, if you need to manage them and you don't think you're going to be able to, that is an option. Have it like the daytime method and the nighttime method. But yeah, but I wouldn't, yeah. That's what I was thinking. During day, active, during night, only target 1. Yeah, that would be the way to get the best of both worlds. That way you can still take advantage of your opportunities. Some of them just may come in a different way, and that could be for better or for worse. Target ones may keep you out of some trades that stop you back out for break even. Or they may stop you from hitting target 2. So it's going to be for better or for worse. The cool thing is you can actually, since you have all your backtesting data, you can actually go back through those trades that triggered at those times and see what the results would look like based on kind of opening and closing prices, or not opening and closing, but in time involved in the trade and time out of the trade. But I think that's a solid idea. Yeah, I think it's going to be to look for trades that you can only trade during the London session actively on the hourly chart. Well, no, I guess if you're talking the whole London session. Yeah, I mean, yeah, I don't know. I think either or. I think you can probably get away with both. Because if you're saying the whole London session, when I'm thinking London session, I'm thinking like London live room. I'm like, man, you're trading like 2 hours. That's not going to be enough. But if the whole London session, right, then that's a full 8-hour day. You can find some opportunities there. Yeah, I think it'd be fine. I think it'd be fine. Once per hour, I can check until the end of the London session. Yeah. Or you know what else you may want to consider too. I mean, just peace of mind. Don't underestimate peace of mind. It's like, do you need to trade the rest of the hours? That's something you got to weigh. It's like, yeah, maybe it's a little bit more profitable to trade the rest of the hours, but like, maybe you just want your brain to chill too. I can tell. This is what happened to me when I went to the single target on patterns, and I had some other war stories about this as well. But when I went to the single target on patterns, it was first to kind of save my trading because low volatility was killing me. And then what I noticed when I was doing that, it was like, man, like I'm sleeping a lot better at night, right? Because I used to be up at night like worrying about trades, like, man, ooh, what if that hit target one and I didn't roll stops to break even and I didn't adjust this and now I got to do that and now I got to wake up, and I found myself waking up in the middle of the night just like checking my charts just to have like peace of mind, and then like that would interrupt my sleep. It wasn't too hard when I had kids because I was up early anyway when they were fresh diapered kids. But it was I didn't really get good sleep because my mind was racing about trading. Right? I'm sitting there thinking about all trades that could trigger, that may be triggered, that may need to be adjusted. Am I leaving money on the table? Am I going to have a trade on the hourly that runs down and then I've had this before, that run down, hit target one and then bounces up and I wake up in a loss. And sometimes peace of mind could be worth more than that. Having just the ability to get a fresh night's sleep saying, I don't care what's happening in the market. Like everything is handled. Like if a trade gets, if this is triggered, boom. Or maybe, hey, because I'm not trading, like, I don't care. I'm not worried about that double top or double bottom because I can't take it anyway. And if I miss it, it doesn't matter. It's still a good trade or a good miss because it wasn't supposed to be taken. That goes far as like the mental side of trading. And I know the mental side of trading doesn't directly relate to the monetary side of trading, but it all kind of works together, because if you burn yourself out and go crazy in your head, you're going to go crazy in the charts and burn money left and right. So that is something to think about. See how many of your trades are actually triggered outside of that session. If it's an equal distribution or a high amount, then yeah, maybe you got to implement something like, I got to be trading these things. But if you find like maybe it's 70-30, 80-20, like 80% are triggered during your London session, the other 20 are triggered during the night session, maybe that 80 is enough to just be like, hey, I'm not going to worry about the rest of that 20%. I'm just going to keep it moving and have this be like me time. I'm going to give myself a mental break. That's key. Who said, for someone who has two targets, does it mean they have to wait until they hit target one to activate and roll for target two? No, you can put your target one and target two on at the same time. You'll just have to make sure your stop loss is adjusted, because when target one hits, your stop loss is still the full amount, the full position size, although you would only be trading half the position size. So therefore, if you got stopped out without target two hitting, you would actually, let's say if it's a short trade and you got stopped out as the market went up, you would now be long one position going the opposite direction. So you would have to either adjust that or have some type of automated trade management strategy that adjusts it for you, or you're programming it to say, if target one is hit, then reduce stop loss by half and also roll to break even. But you could have your targets. You could have your target two set. Like I always set both targets. I have one and two set just in case you get that hammer that just slams down and gets them both. As per my back test, more than 60% of the trades happen during the hours that suit me. Yeah, it's not bad. Run the numbers. See what those other 40 are doing. You may surprise yourself, right? Yeah, I've seen crazy things in the market, especially on hours and downward, where it's like you may find that 60% of your trades happen during that London session, 40% happen outside of it. You may find that the majority of your losses come during a very particular session. So like how cool would it be if you discovered like, man, okay, so 40% of my trades come after the London session, but like 60% of my losses are during that. You just eliminated most of your losses. How about that? And there's some wins sprinkled in there as well, but like you never know. Like it's when day trading, I noticed that I've done a whole bunch of day trading, but it's very cyclical in day trading, where I've had strategies that performed really, really well from like 6 a.m. to like 10, and then like they sucked from like 10 to like 1, but then from like 1 to 3 they were on fire again. And it's just the nature of the markets, lunch breaks, the London session opening, the London session closing, the New York lunch, it's weird. But I've seen stuff like that. I remember I traded one strategy when I first started. It didn't last too long. It was one mechanical strategy, and I was a new trader, but I wasn't like good. I was still in that. I was trying to figure myself out. All right, I was going through some stuff, but I had this strategy that I would trade from like 6. These were the optimal times. It was like, man, I hope I remember this. It was like from 6 to like 10. And then I would trade it again from like 1 to 3, like I mentioned earlier. And then I would have to trade it again from like 9 o'clock to 12 o'clock at night. Because like I did all the back testing, like I crunched all the numbers, like those were the absolute optimal times to trade this strategy. Didn't last long because being up from 9 o'clock to 12 o'clock at night didn't work. Did not work for me. I'm not a night owl. 10 o'clock came, I got the droopy eyes and and then it'd be hard to wake up at 6 again, right? But I remember I broke it down where I traded those specific hours, and I would plan my day between them, right? So I'd wake up at 6, 10 o'clock, I would go to the gym, work out, eat lunch, do some studying, and then I'd come back at 1 for my couple of afternoon hours, and then I'd do some studying, eat dinner, do whatever I want to do, leisure activities. And kick the girlfriend out at the time at 8. Like, hey, you got to go. I got to prep for this 9 o'clock window and get the trading again. Wasn't good for my love life, though. Wasn't good for my love life. Kicking her out every day at 8 o'clock. Get out of here. Don't you want to stay and cuddle? I want to cuddle with these charts. Get. Money over everything, right? So, but yeah, it's interesting what you find when you break up your results by hours, and sometimes it's completely random, So you don't want to make something of nothing, right? Sometimes we have the ability, we want to create a pattern that isn't actually there. I just spoke about that in the podcast the other day. Sometimes we want to create patterns that aren't really there. So make sure you're actually seeing something that stands out. Like if it's an equal distribution, don't be like, oh, well, there was one more losing trade in this session. That means that whole session sucks. Like, no, it's just one more trade in a bunch of random trades. But if you're seeing a trend where it's like this specific time gives like 80% of your losses, there's truth to that. Again, as long as you have a big enough sample size. So that's, yeah. I would do that. Hope you guys enjoyed the show. Again, this came from one of our private Q&A sessions on the platform. If you ever want to join, check us out, www.tier1trading.com. Now, the Q&A session is strictly for premium members, but if you do the trial membership, not only do you get 14 days on the platform to play around with courses, download software, but you can also join us for the other live sessions that we do during the week, the live trading room sessions and the accountability sessions as well. So check it out, www.tier1trading.com. Rate, review the podcast before you go, and I'll see you guys next episode.